Hello, welcome back to this week's market update. Today is Monday, July 14th, 2025, and we'll jump right in. It was a relatively quiet week on the economic data front, but headlines did pick up after President Trump announced a new wave of tariffs, many of which are scheduled to take place in August. With this being weeks away, though, markets interpreted the move as more of a negotiation tactic rather than a policy shift, resulting in a muted reaction in markets last week. By the close on Friday, July 11th, the Nasdaq Composite was just about flat, down 0.08% last week, followed by the S&P 500, which was down 0.3% last week, and the Dow Jones Industrial Average down just over 1% as of close on Friday last week. Looking at our market and economic news from last week, NVIDIA hit a $4 trillion market cap last week. You can see shooting up really since the April sell-off, becoming the first public equity to reach that milestone. Its market cap has more than quadrupled since 2022, fueled by explosive revenue and earnings growth tied to its leadership in the AI ecosystem. Moving along in our week, the U.S. Treasury posted an unexpected fiscal surplus in June, marking the first June surplus since 2017. A major contributor was a sharp increase in customs duties here, which tripled from a year ago, totaling $27 billion, contributing pretty significantly to the $27 billion in the surplus in the month of June. Other large revenue categories included individual income taxes, social insurance and retirement, and corporate income taxes. On the other hand, the largest spending categories were Social Security, net interest expense, which totaled $84 billion just in the month of June, as well as health programs. This is just 1 month of positive progress on the national debt, but it did offer a notable boost to the concerns over the U.S. debt load. May's consumer credit data showed that revolving credit, which includes things like credit cards and personal lines of credit, fell 3.2% from a year ago there, marking the first monthly decline since November of last year. This also demonstrates a trend that has been happening since early 2022, where the growth rate of total revolving consumer credit has been moderating quite a bit. While the decline could suggest that household finances are improving as consumers pay down debt, it may also signal increased caution as consumers prepare for potential economic headwinds. Credit plays a dual role in the economy. When used efficiently, it can fuel economic growth, but excessive debt can also increase risk, as seen during the financial crisis of 2007 to 2009. This week, 42 of the S&P 500 companies are set to report earnings, with major banks kicking things off. We will see JP Morgan and Wells Fargo report earnings tomorrow, followed by Bank of America and Morgan Stanley on Wednesday. Overall, analysts are expecting the financial sector to post about 2.4% year-over-year earnings growth for the second quarter, but banks are expected to be quite a drag on this, with earnings expected to contract about 11% from a year ago. Much of that drop stems from JP Morgan, whose Q2 2024 results were boosted by a one-time nearly $8 billion gain tied to Visa shares. Elsewhere in the sector, consumer finance is expected to shine with 23% earnings growth from a year ago, followed by insurance expected to see 13% EPS growth, and capital markets expected to see 11% growth from a year ago. Last but not least, Bitcoin has continued to fuel its rally in recent weeks, supported by growing momentum in regulation ahead of new cryptocurrency-related legislation being presented this week. This is a growing push for regulatory clarity, and it is widely viewed as a positive sign for institutional demand as more buyers are able to enter the cryptocurrency markets from an institutional angle. Grayscale's Bitcoin ETF is up more than 20% year to date and up more than 70% from a year ago, with physical Bitcoin delivering even stronger returns during those same time periods. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.